Good morning, good afternoon, and good evening. Doc here from North America. Let's see. Let's see what we got going on this today. Having a little technical difficulty with my J4X this morning. My password has changed, and I'm trying to readapt it. Get the new one. But after that, everything else seems to be fine. As you can see there, we're looking at. We're not talking. Let's take a look at Swiss. Right there. As you can see, Swiss is just bouncing around. These last 3 days after that interest rate scare really put a charge into the marketplace in the sense of, reality, I guess you could say. It's about time we had reality. I know that there's a lot of fantasy in the marketplace, especially the equity market. I would say the currencies have always been the adult in the room in many ways. But when it comes to bonds and currencies, they have been to a great extent the adult in the room forever. And now that we live in this quantitative easing era, for the last 13 years, it has made it tough. It has made it very tough. It's very confusing, and as you can see, we get put into these ranges that go on for years. They just bounce back and forth, slow and steady. And the U.S. Treasury Department puts out a statement every so often on who is manipulating and who is not, and just some of the stranger things. But the stock market is truly more of a fantasy, and it's built on an idea of we've got an idea, and you should be invested in it. That's pretty much what it comes down to. So. That's when they say that they beat the markets up yesterday. I don't think they beat them up. They just pushed them down a little bit. Nothing more than that. And you have to excuse me. I have a little cold going on here. No COVID, just a little cold. So I might be sneezing in a few seconds here. Okay, it disappeared. We'll just blow our nose instead. There we go. So when it comes to the marketplace yesterday, we talked about it a little bit in the morning where they were going to release their minutes, and when they did, it definitely put a little chill. There's a nice headline this morning I'm seeing. It says, "Yields matter again." That was about an hour and a half ago. Actually, to be exact, it was 2 hours and 19 minutes ago. Nice article jumping out, and matter of fact, they have like a post on the old New York floor, and the specialist who was, that don't really exist too much anymore, that work different products. That's why they call them a specialist in this and a specialist in that. They have a picture of that and says, "Yields matter," and in parentheses, again. Wow. Yes, indeed. So we're hoping to see that story plays out. We go back to some form of norm where earnings and PEs have more of an effect, and CPI and PPI and just all of that stuff that we lived with for a few centuries, would come back to norm. And we'll see if that does. And so you can see there this morning, this is a third day going on a fourth now with that was the spike of the interest rates. And we can give you a quick view of that interest rate spike. You can see how it's acting again today. Let's see where we're at. Let's put that in there. And it's right there. And we'll just switch this over too at the same time. And you can see there, it's we're moving down to the lows again, breaking the lows of the last couple months. And when we have J4X running, we can always show you, into the distance how it has been playing itself out. You can see here they've broken these lows of October, and we've done it in just 4 days basically. And so that's what usually they like to refer to them as the bond vigilantes. Always like they're just like very radical, I guess you could say, something like that. But that's the action we're seeing in there, and that is having some of an effect on currencies and stocks and so forth. Matter of fact, you can see it on the metals complex. When interest rates jump like that, there's gold this morning. You see they're putting pressure on gold and taking out the low of that wild move down from the big interest rate shift. In other words, usually it's a cost to carry, and what happens is that since gold doesn't pay a dividend, you have to pay interest to hold on to it, and if it's greater than the return and what's going on, that cost to carry thing puts an expense in it, and they discount gold and silver. That I understand. With 5% or 4% or 6% of inflation, I don't understand why it's discounted. But again, that's a manifestation of the quantitative easing. Let's shoot over again to the cup of tea. On a soothing throat. I like that. So, in the end result, this is going to go on for a while. Let's take a look at the stock market. You see it doing the same thing, sliding over. Now, if this product, let's see if we can contract it here. You know, if this product breaks down below 1450, down to 1400, then I would imagine that means something. And oh, there's the Robin. Let's see what the Robin has to say. No, we just lost him. Let's see. There we go. Let's see, just check. You good?
You're already on the air, right?
I'm sorry?
You're already talking on the air. Right?
Yeah, but that's all right. I always make sure if you call, you know, I'm going to answer.
Take a look at wheat for me.
Okay. We're going to jump to wheat.
The way I look at it is right now, it's in a weekly sell, but a weekly and a daily sell from yesterday.
Right. I think it probably had the red green go on or something like that. I'm opening it up now. But both.
It doesn't.
Did it have the green, but the lines were below the zero line?
Red green from yesterday.
Yeah. Yeah. And here, I'm opening it up now, and then the show will be able to see it too at the same time. Let's see, July wheat. There is. Where's July wheat? It'll jump out in a second for me. July wheat. Where are you? There you are. There's July wheat. Okay, yeah. So July wheat is trying to go into a daily buy at the moment.
Right. It's trying.
Yeah, and it's got the it's going through the zero line. And that's what that's all about. Yeah.
And yesterday it was just below it about the same
Right.
amount.
Right, exactly. But it's been in a daily sell for what's that? 2, 3, 4, 5, 6, 7 days. It's been in a daily sell.
It caught the break.
Yeah, yeah, and it's been in a weekly sell for a while. What's that?
Caught the beans too.
Yeah, where's it at? Right there. Something like 2, 3, 4 weeks. It's in a weekly sell.
Yeah. So right now you're neutral because of that double dot.
Exactly. More, not as much as the double dot now, but because we're in the weekly sell and trying to get into a daily buy. One thing is for sure, you don't want to be shorted. That's the answer there. You know,
All right, I'll just tell them it's neutral.
it's neutral, exactly. Right, exactly.
Okay.
No problem.
Okay.
All right, traders, see what I mean? What happens is that when someone asks a question, I respond, be it a telephone, a text, or in the webinar. I will stop what I'm doing and respond. That's the way I roll. You're talking about money, you're talking about trading, and you're talking about it most of the time live. So there is an expediency to resolve that. So there's no reason for me to go through my conversation, you know, looking through the different products that we look at. Let's go back to where we were, and that was the Swiss. I think we were starting to look at the stock market with the way it's sliding. So right there, yeah. Yeah, so to me, that's not a major slide yet. I mean, that's well, I guess is that at 12% from 16,500? It's not even. It's not. It was at 10% would be. I guess. Let's see, what would be 10% would be 1,500. So I guess we've dropped about close to 10% slide. That's what we've done. We've got about a 10% slide going on in the NASDAQ, whereas, as you can see, some of the other stock indices, and Robin was talking about wheat, but you can see the other stock indices like the, that's gold there, like the S&P 500, nowhere near from 4,800 down to basically 4,700. Not much damage is being done there. And then when you look at the Dow Jones Industrial Average, it basically went up to an all-time high yesterday, fell off of it, of course. and it's it's only off by, what is that? The high was 800 and change, 36,800. We're trading at 36,400 basically. You're only talking 400 points. I mean, it's not it's not a crash or anything like that. They're just lightening up the load. If you have a product and you own it and you got a profit in it, then if you don't sell it when you have a profit in it, the next thing you know, you're selling it when you have a loss in it. So the idea is to take profits, and so that's what happens. All right, back to the Swiss, and let me just double check to see if Janos has responded. I'm trying to get my password for my J4X. I miss my J4X. I've got 2 indicators on there, or 3 indicators on there that I've put together that makes J4X a very good tool. Let's see, not there. So he hasn't responded there yet. Let's see if they're doing it in the chat. No, not in the chat either. Okay. All right. So you can see here on the Swiss, as we were looking at a few seconds ago, you can see the strength is there. It's trying to perk up. I don't know if there's anything really going on. Interest rates are going to rise. Interest rates have not been the deciding factor to currencies since quantitative easing. So it's awful hard to take this too serious and get too scared. They'll put pressure on it. They'll take some profits. They'll lighten up. I imagine, how markets like they always hear the saying in equity markets, buy on the rumor, sell on the news. Well, the rumor is that interest rates are going up. Yesterday, the release of the 3-week-old notes from the Federal Reserve kind of confirmed it a little bit more. Same token, the Federal Reserve likes to pretend that they're not, and they're going to at the same time. It has got that nervous characteristic that goes on. Anyhow, that is where we're at with the Swiss and the dollar. And in this case here, the dollar is obviously doing nothing, just hanging out right there. All right. Now let's jump over to the euro. Euro is trying to get back into that daily buy, and it's refused to really roll over on the weekly. So, money is not that paranoid, obviously. And I guess what we will see as time goes on is that money will, take profits, and then when they see prices low enough, there's talk of, I guess a half a point increases 3 times. That's the rumor. The notes kind of insinuate maybe a quarter points 3 times. So that's 3/4 of a point. Right now, the 30-year bond, U.S. bond is yielding a little better than 2.10, something like that yield, 2.10 yield. We're gonna go check that as we say that out loud. And so what we're really looking at is that, what are we looking at? 3.5%. It probably will not even touch the what are we looking for here? It probably will not even touch the inflation. They'll probably treat it like irrelevant. Kind of shake their heads at it. I mean, it won't. If there was real panic, real nervousness, they would compensate. They would. They're not. They're just taking profits. And right now, the yield on the 30-year bond is 2.13. On the 10-year bond in the United States, it's 1.75 basically. The 5-year is at 1.5. It's actually 1.47, and the 2-year is not even at 1%. So it's under that at 8.86% of 1%. So we're not really seeing, that much of a panic, but the media would make you feel and act like as if it really is a panic, but it's not. So anyhow, that's where we are. That's where you can see the euro here trying to, play the upside now a little bit. We keep on, let me show you the Fibonacci sequence we have parked on this through the range. And so the range is, let's see, one more right there. Yeah, right there. So what we have done is we've dropped underneath the 50 percentile, got down to almost the 0.23, and we were wondering if it was going to go to the bottom of the range here, down at the 108, almost the 109. It's like 108.8, something like that. but it doesn't. So far, it's just kind of locked, flatlined. I mean, that is not something to be paranoid about. That's something to be happy about when you have currencies. You kind of want them to be less volatile, not more volatile. You know, because you know, when this thing goes down to 108, that's inflation. You know, when this thing goes to 113, it's less inflation, and inflation is the big factor there. All right. Let's see, nothing else here. Then where do we go from there? I guess let's go to the cable, which has been very, very strong, performing very well. It busted the line there yesterday. They tried to take it down, but it's still holding up, and that weekly buy is looking very firm, holding above the time manifold even right there. That's the plus side of the time manifold. These two lines, the mirror images, are the time manifold. And if anybody wants to understand that, I'll gladly try to get why we define it as a time manifold. And then from there, you know, you see the cable acting very firm. We keep on thinking that, you know, maybe it'll find a way to get up to the 50 percentile again of its range. And these ranges have gone on for years now. All right, from there we dance our way to the laboratory, the financial scientist here just observing one of the industrialized nations on the planet having issues with inflation. So that is a education in itself, you know, something to watch, something to learn from. And there it is right there, the Turkish Lira. You see it's firming up. Where's that line at? Did we draw that line in there yesterday? There? Maybe we put it into the euro. We expect to see it play this particular area right here. And maybe, you know, this will be the A, this might be the B, and then they're trying to figure out what those free puts are. And I had an article yesterday and got pulled away and did not read it, and didn't read it this morning, and I need to find that article. I have it parked, and it's going to talk about how they made $10 billion going into the end of the week of last year. It's always, like I've always said, there's always some type of fun and games that occur in a currency or two or a product somewhere along the line. It's always something. They, you know, out of nowhere. And so what happened was the Bank of Turkey, or the Central Bank of Turkey, booked $10 billion of profit going into the last week. As we take a sip of our tea, as we fight our head cold. So there we are. You can see this is not going anywhere particular at the moment. So we're going to jump over to the Turkish Lira and the Euro right there. I bet the line is in there. There it is. We put that little yellow line in there thinking it's going to try to run back to that first and then stall out. I don't think it's going to go after these highs or anything like that, or the 18s in here again. But we'll keep an eye on that. You can see it's trying to turn, and you can see that the weekly has not given up, even with all that big slam going on. We've been in a weekly buy now 15 whole weeks, as you can see here on the fact check spreadsheet. As we scroll down to it, right there. 16 or is it 15? It's 16 full weeks now. This is the 17th week. So, you know, we're looking at a third of the year now. 17, 3 times 17 is, what is that? 30, and 7 is 21, so it's almost a third of a year now we've been in a weekly buy in this product. Since the 10 area, or 9.5 area of the Euro Turkish Lira pair trade. Talk about being accurate. Alright. We try to be accurate here. That's the whole idea, because everybody is doing, we know everybody here is trying to do one thing or another. The one thing is to make money. The second thing is using real money. So, and then the third thing is to practice and get into the rhythm so that you can do the first two, make money and use real money. Alright, from there, what we do is we go to the Canadian. The two of these marched along really well for a long time. Let's take a look at it. And you can see it even spiked to some extent up in here, but instead it was a slow, steady sell-off here. And it topped here on the 22nd. Let's just go take a look at the Turkish Lira. Let's go back to that Turkish Lira. Right there. That was on the 20th. Okay, so they slammed it on Sunday night, Monday morning, and then they started putting pressure on the Canadian, basically at the same time. There's the 22nd. There's the 20th right there. It kind of stalled for 2 days, and it was still on a weekly buy, and that week of the pressure pushed it into the weekly sell, and you can see a second week in a weekly sell. Has been turning up. Not much. There's not much indication that this thing has any real direction to it any more than the rest of them. And you can see we have the range itself, Fibonacci, right there. So you can see how it acts during the range there, playing with the range. That's just 6 months right there, 7 months, something like that. It goes on for a couple of years like that, where it finds a way to play the range. And that that between the Federal Reserve and the central bank, here at the U.S. Treasury, the two of them talk about manipulation. So that means they have a set of rules they just have not published to us. They've obviously published them to the different central banks around the world about what connotes manipulation, and so they don't want to get put on the manipulation list. So they stay inside their range, I imagine. That's the only other thing I can imagine. We see it physically, where currency pairs like to trade this very giant range, and they don't seem to want to break away from it, and they have adjusted for it over the years, and now it seems like they're locked totally into this range. They slip out of it. You get things like interest rate changes that weren't expected, or inflation that was not expected by them. Us, we thought the inflation was going to happen one way or the other, but no one wanted to listen. Now it's happened. They kind of ignore it, which is even cuter. They even came up with a cute little name for it at one point. What do they call it? Transitory. Transitory. Yeah, it's transitory. So, that's the world we live in. So it's always interesting to try to interpret and understand. All right. Now, let's see where we go from here. Let's head over to the from the Canadian. What we do is we interpret. We try to use the Canadian as an interpretation. So it works more than it doesn't, but it's not the best tool out there. But it's interesting. It's just the way we follow the South African rand. So you have here where it's losing value against the dollar, but not a lot. It's at the top end of the range, so you don't expect a lot of crazy out of it. So what we are interpreting is that obviously gold should be, going down in value, which we know it has. We've already seen it once this morning, and we're going to show it to you again right here. Normally we'll show you it on J4X first, but in this case here, we don't have our J4X yet up and running. We've got to get our new password. And then at the same time, you can see here it's flirting with a weekly sell in the gold. And then we go and look at crude oil right there, right above it. And normally, because of this sideways action, let's see if we can show you that. Because of this sideways action right here, it says to us that oil should be just kind of flat and steady, something like that, because it's really hasn't gone anywhere the last couple of days, the last 4 days to be exact. And when you go back to the futures contract, you can see it was trying to be that way, but obviously there's more buyers coming in, and it could be a flight to safety. It's a lot easier to buy oil and do options on that and turn it into a synthetic than it is to buy bonds itself for flight to safety, which is normally the way you would think of flight to safety is buying bonds. Hey, who's that? That's Thomas. Thomas, how you doing? Welcome this morning. I'm going to take a sip of the tea while you respond. With a cold, it feels so good to have a sip of tea. Would you like to see any particular product, Thomas? We're always glad to look at anything someone wants to look at. We will answer questions out of sequence because we always feel that money and trading are paramount. In other words, they're important, and so when someone asks a question, I try to respond to it. Like my friend in Chicago, running the charts, called about a question about wheat, and we stopped what we're doing and we talked about it. So, if you have a question on a particular product, just fire it out. We'll go after it in between my Kleenex and my cough drops and my tea. All right, where did we leave off? So there's a CAD, and you can see the currencies. Not the currencies, the metals and the oil showing interesting strength. And I don't think they have much of a choice. If interest rates are going to rise because of inflation, well, you got to think crude oil must be one of the best inflation hedges. You would think, they can raise their price. And that's the golden rule about inflation hedges. They have to be able to raise their price and still be able to sell their product. And that's definitely needed, especially in the middle of winter. All right, now from there we jump back to the currencies, and what we do is we take a look at the South African rand. Due to the fact that gold's going down, I'm just figuring it's sideways to up at this point. There we are. And no, it's not. Look at that. We keep on thinking this thing is trying to tell us something here. In daily sells and weekly sells, maybe we're going to see some action in the gold. That would be so nice. Because they pounced on that, and they pounced on the silver. They pushed them down, and our gold is, what is it doing? It's like hanging out underneath the weekly at this point even, which is disappointing. Right there, you can see that. It's just, I miss having my Forex. Can have at least one of them showing you what I'm talking about. See that right there? They're really flirting with the weekly sell with no problem whatsoever. So, and they're taking gold down, I guess, because they just think it's going to be too expensive to hold on to. When they, the cost of storing it, and it's always related to interest rates, and so you take $1,800 on them, 1 ounce, and you're storing tens of them, then you're going to be paying something like 2 or 3% interest. So then what they do is they discount the metals complex itself. All right, from there we jump over to the ruble. Let's see what the ruble's up to this morning. Right there, we have that also on the spreadsheet. You can see 8 weeks in a sell and 3 days in a sell. No, I'm sorry, 8 weeks in a buy. That's the buy side on the B. C is the sell side here. That's the weekly. Just roll it up like that. WB, WS. So we're 8 weeks. Let's take a look at the ruble and see what it's doing. You can see here, it's still in a buy. It's been in a buy since back in here. You can see it's found its way to drift up, and even with that slam, with the interest rates, it's doing its best to still drive. And now you can see we're flirting with the daily buy. So we got pressure there on the ruble. They're putting some real hard pressure on it. Now, from there we go to the yen. There's the yen, and you can see it's still in a buy from here on a daily basis and on a weekly basis. So again, the dollar has been, lifting against this product in particular, and that inflation is slowly leaking into the Japanese society. And that's the action we're seeing in the yen. And we're at, I think Forex showed us that we are, in like 5-year highs, something like that. Yesterday we did the weekly and we went out and we showed like 5 years. We're playing with 5-year highs at this point. And then we go over to the Mexican peso. Right there. See, it's lifting up a little bit, and it slipped into a daily buy yesterday on that one. And we've been in the weekly sell for a couple of weeks here. And it's just been a soft slide. We've been in the daily sell almost straight through this whole slide, except for we had a day or two of up right there. We got into the buy, and then it rolled over right there, and we're in the sell. It's been steady and consistent. And that's pretty much the magical tour of the currencies that we follow. If anybody would like to see any other currency, just shout it out. We'll take a look at it. Okay, so from there, what we're going to do is we jump over to the metals complex and then we look at the energy complex and see what kind of flavor we can understand, see what it's trying to show us, see where trends are. Oh, here comes a sneeze with this head cold. Almost a sneeze. Nope, where'd it go? Oh, these head colds are tough. Anyhow, the sneeze ran away. That's okay with me. Now, heading over to let's go to the metals complex. There. And you see the gold, trying to just take out a couple of weeks lows. That's about it. Nothing damaging. You can see the pressure's been on there for the last 4 days and it hasn't done much since. But now we're starting to get this pressure here. That weekly is definitely putting good pressure on it. Let's take a look at what I like to call the spring crop of crude oil. Oh, no, I'm sorry, that's that oil. No, we're doing gold, that's right. So from there, let's jump over to silver. That's not a spring crop. Edge of spring crop. Now see the pressure they put on that today. That's really feeling the pain. We've been in a daily sell since here, a couple days of nothing, and now we are flirting with the weekly sell. So, ouch. Just as you thought inflation was kicking up and we were going to get some action in these products, nada, buckus. Indeed. It's a shame to watch financial history just thrown out the door. Because one day that will come back. It will. It will come back. The reality will be, for 13 years we've had quantitative easing. Sooner or later it's going to end and we're going to go back to normal types of investing again. Not this runaway free puts. Okay. Then from there we jump over to copper complex right there. Copper has felt the same thing. Went into the daily sell yesterday. You can see pressing it down again today. It's been real ziggy-zaggy in here. You can see sell, then a buy, then a sell. Literally the next day, and then a buy, and then now a sell. And the only ones you could have taken was the buys, of course, because of it was in a weekly buy there. So you barely made any money out of it at all. You lost money on this, which is a rarity with our math. It's usually we're usually 85% accurate. So, and you can't take the short because we're in a weekly buy still. So we're stuck in that neutral thing that Robin was talking about with wheat, where we're in a daily on one direction and a weekly in the other, which means be neutral. Now, if you're obviously a producer of any of these products or user of any of these products for hedging, for industrial equipment or growing food or whatever, we can show you how to hedge it correctly and not give up the ghost, as we would say. In other words, one of the great problems with people trying to hedge their underlying products is they give up future profits, way too much future profits. And so what happens when they lose money, they don't have the offset of the future profits that they had been, every time they had an opportunity to make some really good killings, they've given that away already. So that's the trick, is to not give away either side of the ball. Make it balanced. Set it up so that when you're hedged, you still can make money on the upside. All right. So from copper, so we've gone gold, silver, and copper. Let's take a look at platinum. We used to like to call that the canary in the coal mine, but everybody's dead in that coal mine at this point, so it doesn't matter. And you can see here, we were flirting with a weekly buy, and we still are, right there. Now, we were in a daily buy, I don't know, was it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, like 15 days we were in a buy, and what we did is we went from the 930 area almost to 1,000, so it was about $60 move on the daily. The problem was we're in a weekly sell, so stuck in a neutral situation. Now today you can see here we're a little in the plus side, and here we are on the daily trying to go into a daily sell. So it's again forcing us to stand to the side. Stand to the side. Watch out below. Alright, so that's the metals complex. From there we're going to go over to the energy complex now. And we looked at, this is the front month crude. You can see it's trying to trade at the higher end of the range of the last, last month and a half. We're starting to climb back up towards 80. You can see here we closed in a weekly buy last week, so you can take longs on this. So you can see it goes into a sell there for 2 days, and then you go into a buy here at the 75-ish area, no, 77 area, and now we are trading at 79-ish area. So that's what we are looking at there. Now when we go what I call a back month crop, and that is the June contract. Let's take a look at that. Where's that at? Right there. June oil. June oil's been in a weekly buy a week earlier. Went into the daily buy a couple days before it. Ran from the $70 area all the way up to 75 in that daily buy and weekly buy. Then we got a little profit taking going for a couple days, and then we're back into the saddle again. Back in the saddle again. Goes into the daily buy at 75, and we're in that weekly buy, and then before you know it, it's traded to a high of 77, basically 76.98 today, from going in there around 75 and a half. So there's that pressure in the right direction. Now from there, I did see articles again. They started lifting them again. Natural gas. You jump over to the natural gas from here, and Europe is paying heavy prices for natural gas, 10 times more than we pay here in the United States for the same amount of quantity. Let's take a look at natural gas, NG. Right there. We're trading in the $3.83 area. I understand Europe is trading in something like the $36 area. So it's like, 9 point something. Hey, how you doing? What's that? Sabri? Amen. Sabri, how you doing? We're just going through anything, but if you'd like to see any particular product, just shout it out. We'll go look at it. We like exploring new ideas. There was a time, and I'll express my reasoning behind the logic. What happens was that there was a time traders were reactive. Okay, what that meant was that orders came at you and you reacted. You bought it or you didn't. You lowered your bid and then you bought it and you tried to sell it on your offer, because orders were coming in back and forth, because there was trading floors and there was trading desks and there was activity. Okay, now we're in the 21st century and there's no real trading floors anymore. And the amount of trading desks now are down by about 75%. And so what happens is that I will be a trader at Trader Day. Nice. And what happens now is that we have to be proactive. We have to decide what to trade and when to trade, because we're not seeing orders anymore. And if you're not seeing orders, you don't have to react. You have to be proactive, which means we need to use as much information to make a decision about making trades. And so that's why when someone asks, we're very quick to respond, because we don't know what idea you may come up with that actually will make sense. In other words, there are no stupid questions in trading. There are only long answers or short answers. And so it's always interesting to try to, answer someone's questions because we don't know if we're going to run across a good trade. I have a problem with funds and withdrawal. Well, I don't have anything to do with that, but you can contact Dukascopy. Do you have an account with Dukascopy? Is that what it is? And I'll wait for you to respond. Because we want to send you in the right direction. Then we'll do a cup of tea real quick while you're figuring it out. So the question is, do you have a Dukascopy account? Is that what you're talking about? No, we're still waiting. That's no problem at all. Because I'm just sipping tea. Yes, okay. So, what we need to get you is in contact with Dukascopy. And then you can, I would say, did you text your broker? Or your contact? Or text support? And that's probably the next direction you want to do, is you want to contact somebody in Dukascopy to resolve that. And so I would email, tech support. You can talk to me about Dukascopy, sure. Let me see if I can find you a name. Let me see. Hold on a second. Let's try this. And we'll text somebody and see if we can get a response out of them to try to help you resolve your issue. Oh, you're from Tunisia, nice. How's the weather? We're having a little snow here. We had some good weather, and then all of a sudden we got snow. Well, we'll see what we can do. I'm contacting them now. I have your name on there. And I can tell them to try to get a hold of you, or what they'll do is they'll tell us who you can contact. Does that sound all right? Card, Dukascopy, nice. Are you talking about a credit card? That's really pretty cool. That makes sense. Well, what we'll do is we will, I've texted somebody inside Dukascopy. I'm just waiting for a response back. Seems like they've been a little off of late the last couple of days. They've not been too responsive. I know that Janos had just gotten back about 2 or 3 days ago. And it's normal for him to respond pretty quickly, and he's not, so I'm not sure what's going on there. But, we'll see what we can do about helping you out. Sound okay there, Aman? And when we get information, we will throw it back up on there. And I can go into my Dukascopy and contact you through the chat system or something like that. All right, where did we leave off? And if you have any trading questions, just fire them out too. So yeah, there is natural gas. So you can see the difference. And I'm sure Oman is not having too much problem with natural gas compared to the rest of that part of the world. From there, we go from crude oil to natural gas, and then what's next? We look at our heating oil. And there is the heating oil. There's January. So that should be out and defunct. So we need to change that to February now. Yeah, see right there. That's the last time it made a trade, was at the end of the year there. So let's put February in there now. February. You know what we should do is throw March in there. That's pretty cool. Yeah, now March is making a nice move up. And again, we're having that cool weather, and we're having snow. You know, we're breaking. We broke heat records a couple of weeks ago, and now we're breaking cold records. So it's always that classic, seesaw going back and forth. You can see the home heating oil that comes in a barrel is in a weekly buy now for going on a second week, and you can see it's going after the highs here. So it's not the worst. I mean, we've seen even higher prices, so that's not too bad. I'm just going to check to see if we gotten any response yet. Let's see. Nothing there. And check Dukascopy. And I've got, I do see something. Let's see. There we go. Asking about account info. Who should I send in there we go. All right, Dukascopy has responded to me. We'll get a response here and see that. I just asked them who that you should ask and contact. All right, so there's the that's the heating oil. So you can see the energy sector is becoming more and more and more popular, and a lot more strength, and I think we're going to see the $90 to $100 barrel of oil again, just because of the inflation and so forth. Let's see. Nothing yet. All right. From there, we go over to what do we got? We got about nine minutes. So let's go over and check out from the metals and the energies. We drift over to the stock indices. So let's take a look at those. See how they're doing today. They've been having that pressure, as you can see. The Nasdaq 100, or on Dukascopy on the J4X, they refer to it as the Tech 100. You see it's been having its pressure. It's been going down. We've been in a daily sell since up in here. We climbed into a weekly buy last week, and it's just never given us a chance to be long because we're in a daily sell. So it's just been pressuring its way down, and it does look like it's flirting with the weekly sell, and we'll see if we get there. That'll be interesting to see right there. Let's see. And then we can take a look at that on an intraday basis too at the same time. And you can see that right here. Now this is what we call 1 Tesla. We use a spatial bar. We don't use a minute or 3 minute or 5 minute or 1 hour or something like that. Which I refer to as Newtonian time, and instead we use a spatial bar, which we do it in an increment of Nikola Tesla. So we call a 369 or 396 actually is the Nikola Tesla harmonic that he was in love with. It says this is the basis of the universe type of thing in the magnetic electrical way, and so we follow that rhythm there. And so you can see here, we go into a buy right here, and you can see the strength that's moved back up. But obviously we are down 50 points, as you can see right there. So it's only a small dead cat bounce going on in that situation there. Checking Dukascopy again for you there. Hold on. Someone is looking for me right now. They're going to get back to us. All right, from there, we take a look at the S&P 500. Again, this is the intraday, and this is on a 1 2/3 Nikola Tesla. And you can see it went into the buy right here. This is a live trading right here. You can see right there it's moved back up a little bit. It's up 3.5 points. Oh, there it is. It's up 4 points, 4.25 points. So it's doing pretty well. Let's take a look at it. Oh, you can't see that. I just realized that. So let's go back to the other one first. And let's just show it to you again. And there is the NASDAQ 100 that we were looking at before on a day bar. This was the day bar. Day to day, we follow days, weeks, and intradays in spatial. And so there's that day bar with it moving down, but here it is on an intraday basis. You can see here going back, what is that? That's, what time was that? That was about 10 minutes ago. 5 minutes ago? See, 7:10? Yeah. Let's just double check. Yeah, so it's about 11 minutes ago. Went into the buy right here with our histogram and white line, going into a plus, and that was the buy right there. Now it's down 58 points because it's peaked in here. You can see it went into a sell right there. Now we're on the second bar, and it's dropped about 8 or 9 points. Now we'll go over to the S&P 500, and that's a 1 2/3 Tesla. Let's take a look at it on the daily bar. Let's see, where's it at? Right there, yep. And there's the, let's fix that. Right there you go. You see, that's just been rolling a little bit over just in the last day or so. But we have been in daily sell since here, but we've been also in a weekly buy. And so we haven't been able to get long because we're in a daily sell. So we've kind of been trapped in a neutral situation with this product also, knowing that there's downside pressure on a day-to-day basis, but on an overall broader term, there's pressure on the upside. But we'll see if we get any action out of that. Now, let me check Dukascopy again. No response back yet, but they have seen my message. All right, from there, we go over to the intraday there, so you can see that. And like I said, we're using a 1 2/3 Nikola Tesla. And you can see here it went into the buy right there. This one right there. You saw the pressure, and it's still in a buy on an intraday basis. And that's over the last 12 minutes. And what we always like to say is, if you can see if it can work short term. Oh, look at that! We closed on a daily sell. A intraday sell right there, and now it does its little breakdown. And like we said, if you can follow a product on an intraday basis, and it works also on a day and weekly basis, then obviously it's a good tool. And we've developed a good tool over in Forex. Unfortunately, today we're still waiting for them to send me my new password. So I'm not sure why it got wiped out, but we'll just wait and see. And so there is the S&P 500, which is basically the number one stock indice that all funds use across the planet. A little sip of the tea again. And so because of that, there's a lot of participation, a lot of activity. There's just really good stuff, really, overall. 50% of the stocks in the S&P 500 are U.S. stocks, and the other 50% are foreign incorporated companies. So it's a real global index, so you really have a good flavor of where money is really headed. Whereas when you look at the NQs, let's just go back to a daily chart right there. And when you look at the NQs, you're really looking at a very, very heavy tech U.S. companies. There's very few international tech companies in it. And because of that, you get a different flavor, where this thing is down almost 10%. I guess it's like 8.2%. It's down since its highs. The S&P 500 is not even down 2%. And the Dow Jones Industrial Average is the same way. Mainly all domestics. don't think they have a foreign company in the Dow Jones Industrial Average. So that's even stronger. The Dow yesterday was at all-time highs just yesterday morning. So that's even less, and that's been in a weekly buy. Let's go over to that. You can see it right there. That's been in a weekly buy since down in here. So now not even piercing where it started. So it closed in a weekly buy back in here in the 35,000 area, and we've gone almost up to what, 37,000, 36,804, and then this yesterday was 36,832. So we made a new high, all-time high yesterday. So, you know, the S&P 500, which is truly indicative of what's going on across the planet. The Nasdaq is more indicative of interest rate sensitive stocks that have to adjust. It's kind of like the way metals do, you know, because of the cost. They're very cash heavy. Let me rephrase that. They're very cash dependent heavy. So they, you know, when they're borrowing money, which they do a lot, because they need a lot of cash all the time to run. That puts pressure on them when the interest rates rise. So it's kind of like an indicator of that. Let me check Dukascopy before we get out of here today. Nothing so far. So I'm going to give them your name, and maybe they'll be able to, you know, do something about it. Maybe they'll be able to contact you. Aman, S-A-B-R-I. S-A-B-R-I. Let's see if we can figure that out right there. No. Okay, let's try it again. Aman. Alright, so we're going to be getting out of here, but this way I've let Dukascopy know that you have an issue and you want to communicate with them. Let's see, let's go to there. There we are. Is the person. There we go. Alright. Anyway, this is Doc from North America. Tomorrow, we'll be looking at tomorrow's TGIF. It'll be Friday. So we'll see how the rest of this week plays out. See if there's a bounce back in the stock market, or if they keep it down in here. It's hard to say. But right now, I think all these stock indices are below the beginning of the week. Well, you can see right there, the Dow Jones Industrial Average started the week off. Where did it start off the year? It closed at 36,226. That's where it closed on last year, basically, and it's trading at 36,391. So it's above for the week. Now, when obviously looking at the Nasdaq, which is having its issues, it's settled at 16,320. Let's say 321, and we're trading at 15,700. Something like 400 or 500 points down, really, compared to the overall move of the last 6-7 days. And then the S&P 500 is having that same issue. It is below. You know, it closed at 4,758, and we're trading at basically 4,694. So, all right, traders, we're out of here. This is Doc from North America saying happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. This is the Singing Trader, traders. Arrivederci.